Aloha, I'm Stan Cox, Principal Broker and Strategist with SC Finance Strategies and Insurance Consultants. I'm also the author of the books on the tax-free cash growth warehouse strategy, and I'm the Managing Director of the Hawaii Financial Free Thinkers Academy, a nonprofit financial literacy education organization. For the last several years, I've focused on and specialized in the infinite banking concept and the tax-free cash growth warehouse finance strategy. In this video, I'll be explaining how the core process, that is, the leveraging of cash value by means of policy loans works, and what happens when you don't repay the policy loans. Infinite banking and the tax-free cash growth warehouse is the finance strategy that takes advantage of the tax benefits and leveraging advantages of the cash value of participating whole life insurance provided by a mutual company. Leveraging is done by making policy loans against the cash value. That is, the cash value component of the account is used as collateral for the loans. So this is a really frequently asked question. How soon can you leverage your cash value? As soon as there is any cash value in your account, it's available for you to leverage by means of a policy loan. When an account is properly set up to use the tax-free cash growth warehouse infinite banking strategy with, even if you aren't front-loading the account, and even if you are paying premiums monthly rather than annually, there will be some cash value established with the very first premium deposit. For example, if the monthly premium is $1,000, there should be around at least $500 in the cash value as soon as that premium is paid. Monthly premiums are paid by automatic draft. So it typically takes about 3 days for the processing, and then the cash value is available. If you are paying annually and the annual premium is $12,000, as soon as the premium is paid, cash value of around $6,000 or more will be available to leverage. Processing times are the same as I just described a minute ago, about 3 days. If you are front loading your account and paying monthly, using the same premium example of $1,000 per month, there would be the $500 plus about 98% of however much you're front loading into the account available to leverage. So if the front load is, let's say, $10,000, you would have at least $500 of the regular premium plus $9,800 or $10,300 available to leverage as soon as the deposit is cleared, about 3 days. The same example, paid annually, would give you $12,000 regular premium plus the front load of $10,000 going in. And that would produce around $6,000 or more plus $9,800 or $15,800 of cash value available to leverage right away. Whatever cash value is available to leverage, most providers will limit the amount of a policy loan to a maximum of 97% of the total cash value, with 95% being the recommended. 97% is the absolute max. But that being the case, with $15,800 in cash value, the maximum loan would be about $15,326. Again, there's no waiting period other than the time it takes to process the deposit, 3 days. There's no initiation fee, no service fees, as there are with bank loans. And since there are no repayment requirements, really, there are never any late fees assessed. You can request a policy leverage loan either by calling the service department of the provider, or your agent can request the loan for you. If you have your personal account page set up within the provider's portal, you can also request a policy loan via your account page. You can also make payments through your personal page. The provider will tell you that it will take 5 to 10 business days from the time you request the loan to the time you receive the funds, either by direct deposit into your bank account or by mail. But in our example, it's never taken more than 5 days. While a loan is outstanding, the portion of cash value that is collateralized is not available for either withdrawal or further leveraging. However, with non-direct recognition providers, all that cash value continues to participate. That is, it continues to earn dividend interest. Now, Nelson Nash said it, I say it repeatedly, and the Rockefellers insist on it. What is that? Repay your policy loans. Now, one of the great advantages of leveraging the cash value of your account, which is in fact your tax-free cash flow warehouse, is there are no repayment schedules required by the insurance provider. That means that you can repay the loans in any amounts and at any frequency that you choose. That's a privilege of owning your own bank. So while it's not strictly required that policy loans even be repaid, it is highly recommended for a few really good reasons. One is because when you repay the loan, all that money becomes available for leveraging again. Another is because whatever is outstanding on a loan at the time of your death will be deducted from the death benefit paid to your beneficiaries. A disadvantage to not repaying your leveraged loans is that the loan interest will continue to accrue. And generally, the provider will insist on collecting the interest on the loans annually. If you don't at least pay the interest, usually the provider will initiate an automatic policy loan to pay the interest. And if there isn't enough cash value to cover that interest payment, the policy may be in danger of lapsing. We don't want that to happen. The real beauty and the two greatest advantages of using the tax-free cash growth warehouse strategy is the money in your account continues growing with the compounding dividend interest, even while it's leveraged by a policy loan. And that growth is tax-free. With the right provider, the interest you pay for the policy loans is lower than the dividend interest being paid to your cash account. And that means that even as you use the money in your account to finance things, it's still earning at a greater rate than what you're paying for leverage loans, and it's compounding interest. So here's the thing. Even if the difference between what you are earning on your money and the interest on the policy loans is just 1%, you're still making a positive gain on your money, even while you spend it. There's just no other way that that is possible. The question then is there any advantage to paying off the leverage loans at all? Well, yes, of course there is. As I mentioned earlier, repaying the leverage loans makes all the money available for leveraging once again. And repaying the leverage loans stops the interest being charged on the loan. Repaying leverage loans does not speed up or increase the growth of the cash value, unless you're using a provider that practices direct recognition. Then paying off the loans does help everything along. The cash in your account with a non-direct recognition provider will still receive the full compounding dividend interest either way, whether you repay the loan or not. You will profit more simply because the interest charge stops when you repay the loan. And again, you free up all the cash value to be leveraged for your next purchase or project. But Whether you pay off your leverage loan in a month or a year or more, all your cash value continues to grow with compounding dividend interest. If you use the leverage loans for any kind of business activity, the interest you pay on the leverage loans becomes a tax deduction. So there's that advantage as well. In my book, The Tax-Free Cash Growth Warehouse Nuts and Bolts, I detail several examples of applying the strategy for specific uses. With each example, I go into the planning and design of the account and include repayment of the leverage loans as part of the strategy. Both books, Tax-Free Cash Growth Warehouse, 178-Year-Old Secret, and Nuts and Bolts, are available on Amazon.com. For a more complete explanation of the whole tax-free cash growth warehouse strategy, you can watch our free 60-minute webinar. The link is in the description box below this video here. If you'd like to book a free phone consultation with me, the link to my Calendly page is also right below there. If you'd like to apply to become a client of ours, the link to the application is also in the description box below there. Please subscribe to this channel and post your questions and comments here. We're here to help, and we look forward to helping you. Aloha and mahalo for watching.